Everybody, welcome to this week's episode of the Lumber Word, episode 138, and we're doing it a week or a day early because uh, two reasons. We got Stinson on, and Greg's daughter is getting married this weekend out in Montauk. So, Greg, you got a busy week ahead of you here.
Oh yeah, yep. Oh,
Um,
and then we. Oh, there he came back.
I got
He was
I
gone for a
got him.
minute.
So I'd like to introduce everybody that hasn't heard of Stinson to Stinson Dean, Stinson co-founder of Revel Building Solutions, and as Stinson, as they put you in the front page of the Wall Street Journal this week, co-founder and also lumber trader. And I mean, that's how you and I kind of met years ago at an all event. And I mean, I know the cool thing about you is you got into the industry from the future side, and I might get this in like where they kind of do it right on the grain side, where you kind of cut your teeth. Does that sound right? And
Yeah.
I mean, then you came over to the lumber side. What was it like making that switch over?
Well, it's a funny story. I was on the grain desk at a company now known as Stone X, and just kind of taking orders, hedging grain purchases from co-op elevators. And I would hear the lumber desk, which was a pretty small desk, just a couple of folks. I would hear them on the phone talking to their clients, and I kept doing double takes like, man, it really sounds like those guys don't really know what they're doing on the other side of the phone, like real basic hedging techniques. And it kind of caught my interest as an underdeveloped market. The co-op elevators and these farmers, like basis trading and spreads and basis contracts and EFPs and all this stuff was like decades and decades of utilization. And in lumber, they're just trying to, from what I could surmise, understand when you're long here, you need to be short here. And I would hear things like, well, why would I hedge if I know the price is going to go up? Things like that.
Ash, Stinson's bringing up, he's saying it really nicely. Is that he's saying is, wow, this is a target-rich environment.
A lot of education needed. So I asked them if I could make some cold calls and recruit for one of their hedge schools. And that kind of got me into the lumber industry and from that risk management side. And eventually went out and got into the physical markets and at my core, I'm a lumber trader. And then this year, with a new set of partners, went in and bought a component manufacturer in Northwest Indiana. So it's really interesting to be a truss manufacturer, wall panelizer, and seeing, because I used to sell these folks for 6 or 7 years, and seeing this side of the table and the driving forces behind some of their decisions on the purchasing side, the species side, the length side. It's really been interesting. Lucky enough to have a really good team down there in Valparaiso that do a good job from an operations perspective, and as kind of bringing that lumber trading mentality. It's been a lot of fun. But man, I'm a little over 10 years into the industry. Stone X was 2014 when I started.
So I mean, give us like kind of a boots on the ground, synopsis of what you see as, a component and truss manufacturer. I mean, obviously you're probably really just focused on that Northwest Indiana and maybe like Chicago, South Chicagoland market area, or how far of a territory do you cover?
Broader than I realized. Really, we get down to Kentucky, we get out to Ohio, we can get up to Milwaukee, kind of like a 4-hour circle around Northwest Indiana. But I came out of the Sun Belt before this, and the Sun Belt is like a death match. And it's tough and it's tight and there's not a lot going on. This upper Midwest, Great Lakes area, is really steady, and Chicago is probably our busiest market, mainly on the single family side. We're heavy multifamily, and then as we've gone along this year, we've picked up more and more single family. And Chicago is gangbusters. And I think the data that I've seen, some of the macro data, has shown where a lot of the country has red and orange shaded, whether it's rent growth or home price appreciation or depreciation. There's a lot of green around Indianapolis, around Chicago, around Madison. So we're lucky to be in there. So being on the front lines, it's like it's steady, and we're starting to see folks further and further from the geography. These names kind of poke competitors coming in from further away, just to show you that folks are trying to find the bid somewhere.
Stinson, one thing, Greg, that's a great question. I'm going to add on to that one. From coming from the seat you were in before, we're purely looking at a lot of risk management, looking at different species and all that. What expertise did you take over to Revel that kind of makes you, I would imagine you're pretty unique because you basically have embedded that pricing knowledge where a lot of people have to outsource that. So
Yeah.
I'm thinking that your company can give a lot of longer term prices on projects that don't have all the extra fees added on them because you're not outsourcing that, if that makes sense. In some cases you may want to.
Yeah. I think that is a unique thing to what we have going. It's just the forward pricing game. I've been in or around for forever, and there's a lot of money to be made or lost. And traditionally, someone in my part of the supply chain is going to a wholesaler one step down to get a price. They mark it up and they present it to the customer. And then, the job gets awarded. Maybe you go back and lock it in. Maybe you kind of ghost someone for a while and have them reprice it. We all know how that game goes. So we're able to kind of take at least the price certainty and the confidence and the ability to execute on whatever price lock we get in a more confident. We can present that in a more confident proposal because we're the ones executing on the risk management. So whether it's buying out the OSB because we don't feel like there's a good hedge, or hedging with futures, and pricing ourselves into jobs and out of jobs, depending on how we're kind of viewing the market and protecting ourselves from price spikes. And
when you look today, and you said obviously multifamily, like we see right now, there's a little bit of stuff that's come to the surface in the last few days, guys looking for, some November, December starts, but most of what we see right now is people looking for Q1 pricing. My sense is that there's a fair amount of business that's uncovered right now for that time period. And, I'm just curious from your side is, both on single family, how far of a price lock are you giving? And on multifamily, what are you seeing in terms of like new projects? What's that timeline look like right now?
I think that question comes from when I walked into his office an hour ago and said, "Hey, I got this forward order," and there were numbers on it, and he's like, "I'm not touching that."
I didn't even look at the numbers. I didn't even need to look at the number. I just
the lower we go, the scarier, Q1
Absolutely.
short.
Well, I just look at it from our perspective as a distributor today. We've been pretty aggressive in the market as of late. Combination of a decent amount of hedge and just I'm very happy right here to turn dollars, so to speak. I don't see any point. I don't want to reduce my inventory at this juncture of time. I don't know that I want to increase it a lot because I think it's the market bottom. This is not a V bottom that we're going to be looking at. This is a,
I heard someone call it an L or a U.
Bottom. It's an L or a U, right?
Kind of how my first grader does a U, maybe like.
Oh yeah. Oh, for sure. Or maybe like the Trump signature U, the way it ends.
That one apparently is pretty straight. It's just straight across.
Well, let's hope not. Well, and the other thing is like, and I've been saying this to every one of our suppliers is I'm going, hey guys, there is none. There is no help on the demand side now until sometime next year. and I don't know whether that's, you know, Q1 or Q2, but you just cannot bank on that. I mean, seasonally, we've got negative factors in front of us. And secularly right now, I mean, hey, it's a housing emergency. We're going to do all this stuff. You know what? That's 12 months in a pipeline to have any substantive effect.
Yeah.
Realistically.
Yeah.
You know,
yeah.
And the fundamental issue with housing is an affordability issue. And if we have a slowing economy that's only growing at, you know, like 1.2 to maybe high 1%, that's not generating the income growth that people need to be able to purchase new homes.
Yeah. I'm in no hurry to buy. I think you kind of said the same thing. I'm in no hurry to buy. You know, locking in budgets and Q1 and multifamily stuff that's maybe a Q1 start, but gets pushed, and okay, they're moving dirt in Q1, which is vertical Q2 this summer. I wouldn't want to lock in a price today for May. But you know, hand to mouth, and something I've had to step back and realize is for years at this point, 18, 24 months, you've been rewarded the longer you can wait. And if there's a price spike, you're like 4 weeks, and you know, then all of a sudden you hand to mouth and dollar cost average your way down. So the people have not been punished in a long time for being short. Another way of saying that is not getting themselves covered on projects. They're all locked in, ready to go, and they kind of hide that contract in their desk drawer till the last minute. I don't see how that changes anytime soon. I think you're down, your ability to expand margins by lumber getting cheaper is pretty limited at this point. But I also think like you getting squeezed on the upside is kind of limited as well. If there is a skew, I think it is to the upside, but not by much. And demand is, like you said, there's no bailout here to our supply problem on the demand side in the horizon. And if there is, we will all see it coming like from a mile away. It's the supply side that's really opaque and hard to read. And, there's rumors and fits and starts in these curtailments and the announcements. And sometimes they curtail and they don't announce it. So there is no relief coming from the demand side. I totally agree. And if there is, when there is, we'll have time to see it coming. You just hope that there's not a gross mismatch between this coming supply response.
No. And, I mean, what I'll say
demand.
is that over the next, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, there will be continued curtailments. Tomorrow's only Wednesday. Actually, it's curtailment Thursday, right?
I think that's normally when it is.
That's the day where we get it, and then we get a short covering rally Thursday, Friday, and then we're back down. We probably need to do that for another, several weeks. I mean, because the economic reality is, if you look at the current prices that spruce mills and pine mills are selling at, those are long-term unsustainable prices, and things that don't make sense. So typically what ends up happening is, the market will actually bottom out, and as we said, Stinson, maybe it's a squiggle, but it will be better. And then as the market keeps getting better, there'll be continued curtailments, which should be the thing that actually moves prices higher into the first quarter. One of the great things today, and you probably recognize this, is you can buy lumber at today's prices and hedge it in November and pick up, $55 or $60 a thousand, and you're probably going to be able to pick up another $50 or $60 a thousand rolling to January. You made a great quote before, and it's the one that I get is, well, and then like ultimately, if I lose money on my short November or January, whatever it is, and I'll get the call from HQ that'll say, well, didn't you know that price that you were buying at, that you didn't need to hedge it and you were going to make money?
Yeah. Idiot. Yeah.
I'm like, yes, absolutely. But I bought 8 and I sold 2. So it's okay.
Yeah.
Or whatever that number is. Right.
Yeah. you gotta see this hedge programs out to the end, because you end up getting to reset your hedge at a higher and higher number when those spreads are that way. And that spread is what I'm watching. It's out to $50, and it got out to $50+ the prior contract, and until that dynamic changes, which would indicate people want lumber now and they're willing to bid up the nearby contract, my tune won't change that much around supply, excess supply, and the hand to mouth kind of stance.
Yeah, no, absolutely. So, I mean, let's give you the shout out. Ash, you got the article in front of you there?
Yeah. So
big article. Like, our phones started blowing up yesterday.
I'm gonna hold it up so everybody can see it. It's the front page of the Wall Street Journal for everybody that doesn't look at papers.
That.
It's actually print, real
it's
print.
So this is above the fold,
and
which is really significant. And
they don't sell they don't sell print copies of Wall Street Journal where I'm from. You guys are in a nice.
Greg gets it on his
driveway.
Greg gets it on his driveway, and he gets it. And hey, a shout out to Ryan December who did this too. He's a good guy. Does a great job on the commodity side. And Greg was like, hey, let's do the podcast this week and let's get Stinson on. Because
he's the star. He's the star of the article.
It's great. It's great. And one of the interesting things, I made that mistake 2 weeks ago after we were selling off and we came off from the 690-ish and we got down to 600. I'm like, okay, we're going to find a bottom somewhere here. And then these things just go harder and longer than anybody can imagine. And that's why you manage risk. And then kind of been pointing out the difference with people between spruce lumber, which did go up significantly because of all the cross-border conversations, duties, tariffs, 232 and all that. But if you really look at pine, Southern pine and OSB, it really rolled over early in the year and hasn't had much to do with it. So I think when the general public looks at an article like this and says lumber prices flash a warning sign, I think we're talking more CME type of spruce items on this. Does that make sense? Because the other items have kind of rolled over.
Yeah, it's just nomenclature. Lumber futures are going to be a catch-all for anyone who's looking up our lumber price. We know, and I think coming out of COVID, there's just been a ton of education to the general public who have exposure to lumber prices, developers, equity folks, that there's nuance in the lumber we use and where it's used and preferences and hard rules around structural integrity about what you can use and where you can use it at, and then just kind of decades long tradition of what species we use. So yes, there's a difference, and the futures price as a Canadian lumber price delivered Chicago is how it's viewed. We know, and I think you guys did some education on this, that there's substitutes that all of us here worked to get into the contract revamp, because it is fungible with hemp fir and Doug fir and different things like that don't necessarily have to come from north of the border. But largely it's viewed and traded as, a Canadian lumber contract. And the article, Ryan does do a good job. He said people like reading about lumber, and I did not realize above the fold front page type stuff. So that's a lot of fun. Your gut as a trader is like, we're seeing headlines. We're on the front page of the Wall Street Journal. I think there's some stuff in Bloomberg that other folks in the industry are being quoted in. Financial Times is working on a piece. Like, these are the kind of things that happen as markets shift, as folks start to, it's getting in the headlines. Now, I put out a video the other day. The one thing that I think is significant, that is a dynamic that has totally changed from the summer, is the commercial longs that participate in the futures contract. There's a category that are called commercial traders. They're folks like us on this call, sawmills, home builders, anyone who buys and sells lumber or has exposure to lumber. They register as a commercial trader. They have flipped to a net long position, not a huge position, but a very stark difference from where they were at the beginning of June. I still want to see the spread, the calendar spread between the months start to firm up. But the folks in the know, supposedly me and you and everyone else, have covered our short and now have more long positions than short positions as a whole, which actually, like, this has gone way further. I was like, okay, we've kind of retraced tariff or duty or kind of whatever that confusion was. But then we broke through that. Now, like the next $75 has been a demand problem. The first got a 100, 600 to 700 and back down was a tariff balloon. But I think this next leg down is indicative of a demand problem or a demand picture that's really kind of been there most of the year. The seasonal rally's over. There's not a lot of reason to get excited, but the one bright spot is that commercial hedger, as reported by the CFTC, has, I don't know, here's how I'll say it, and I learned this at FC Stone. It's not bearish. So it's not outright bullish, but it's not bearish, and you kind of got to start there. So that's how I see this recent sell-off. The stuff in the Wall Street Journal, I think Ryan did a great job of explaining the spikes. He and I chatted. This is the last thing I'll say. Copper did the same thing. If you look at a copper chart, it was worse than us. Like, it had a one-day drop of like $1, like 550 to 40.
That was all tariff related, right? I mean, and I think your point is, one of the things that's been the noise in the market that's given the wrong signals is the impact and the threat of tariffs and duties and what that really means. We've been saying for 12 months, flat demand side, and through 8 months of the year, the numbers are, hey, it's flat on the demand side, but the supply side hasn't paid any attention to that and has continued to pump up. I had a conversation with the guy today, and Matt, I see Matt's on, and we'll bring him in here in a second. He's like, well, what do you think? I said, well, lumber always goes way, way more either direction than it should. So like when we went to $700, that was crazy and made no sense whatsoever based on anything that we knew. And the people thinking there was 800, I don't have my stash is not that good. But I said, hey, you know what? On expiration here in September, you could see the 480s. And that ultimately to me would be the most bullish thing I could possibly see, is for that like final washout down there. And like I said, I'm back in that whole thing where like, hey, buying lumber in today's prices, I'm fine selling November or January. I mean, pick your number, because yes, these prices are probably long-term unsustainable, but so I can lock in, but I don't know if it's if there's a $20 bounce, a $40 bounce, or or more. But if I can get 50 or 60 locked in, hey, take that takes that on some of it, and and like play with the rest.
Yeah. I think that's largely a stance most folks are taking on my side of the supply chain. Just like, I got stuff, I'm going to cover some of it, I'm not going to cover all of it because again, I've been rewarded by waiting. And now it's the point similar to this concept of, hey, it's not bearish. I don't know how much more reward they have, but they're not getting punished by waiting either. And when and how a rip your face off rally that sustains and stair steps us up to where folks are waiting for it to roll over again, like it has every time for months and months and months. I don't know when that is. We know what it takes. It's demand, but until then, it's like there's not much to be excited about, guys. Like, if there's a big arbitrage in the futures, throw it on there.
About OSB?
I don't, and I'm not an experienced OSB trader. I've kind of like reluctantly become one. And I think OSB, the producers are just better. They're better at their managing their market.
Well, there's so many fewer of them, right?
Yes.
And
Yeah.
you know that
it
what
takes
I would
like
think of OSB is that it'll sit at a price that may not make sense for a long time, and then all of a sudden overnight it has the rip your face off rally for some reason. I mean, I look at OSB sub $200 and I go, I don't know when or why, but it won't. Like all of a sudden we're going to wake up, it's going to be 300 plus.
Yeah,
and it may be, may not be tomorrow, but it could be 3 weeks from Sunday, or a Tuesday in January. I don't know.
Yeah, it may not be tomorrow, but when it happens, it'll happen like immediately. And my biggest long position is OSB, largely because break evens, and I trust that marketplace to sort itself out a lot quicker. And lumber needs a wave of curtailments, and I've said I think West Fraser needs to take the lead, or we're all not going to take it too seriously until West Fraser does something significant. You guys remember?
But they have the lowest cost and the lowest duty. So they ostensibly they should be the last man standing.
Yeah.
I'm guessing though, if you think about it, the break. I mean, with the break even cost, we know. Let's take the lowest cost to the highest cost producing spruce mills. They're losing anywhere from $100 to $150 a thousand, $10,000 to $15,000 per car. Today,
like today's price
today.
Yeah, and I forgot about Fraser's duty, and their call out level for the duty is significantly lower. And if you remember in 2018-19, Fraser's announcement is what turned that market around, the back half of 18 into 19. And I think that's what we were going to need. And to your point, Greg, if you got to get through everyone else to get to Fraser to where they feel enough pain to do something.
I mean, they have a 10%, so they have a $50 advantage over the entire market, and $100 advantage versus Canfor.
Oh God, that's wild. That's wild.
Well, that's just the spruce market. Then you talk about the pine market. The pine producers, some of them being Canadian, also aren't experiencing much better activity.
Mm-hmm.
Let's find out about the U.S. West, Ash. We got the guy about U.S. West on the line with us here.
We're not in as bad a shape as the yellow pine and the spruce guys. We're not paying a tax or duty, whatever you want to call it, and our stuff is just kind of it's limited in terms of you're not going to take a bunch of Hemford dimension into the whole country, because half the country doesn't buy Hemford. They buy spruce or they buy yellow pine. But the Doug fir and the Hemford it's kind of clicking along. I wouldn't say that it's robust, but it's we're getting enough orders every day to sort of keep things moving, and we're not getting kicked in the teeth on pricing either. So it's manageable, I guess. We would love to see better market conditions like everybody else, but we're not in crisis mode yet. It would probably take another major meltdown in spruce prices to really crush the Hemfir and Doug fir markets. So we'll see. I mean, my thought about, typically in the wintertime, the Canadians will pump out more Doug fir and less spruce. That's sort of their pattern. And I'm wondering if that'll not happen this year, just because, everything they're shipping across the border has got a 35% tax on it. So maybe they do some curtailments, and maybe they just stick to spruce. And, I feel like everybody in the room here, we probably all agree that there's just going to be less production. We just haven't seen all the announcements yet. So we've seen two so far. We got Interfor, we got Domtar, and then what's next? So, but I think there will be some significant curtailments in Canada, mainly. I'm curious if there'll be significant curtailments in yellow pine, because in the past, these integrated companies that have cross-border ownership, if they were losing a little bit up here, they could make it a little bit back down there, and that doesn't seem to be the case right now. So,
and it's also with the OSB, the mills that own OSB. I mean, that's not helping them either.
One
Yeah,
question
that's a great
for
point.
you, Stinson. You had a good point about commitment to traders report showing a lot more industry longs, right?
Yeah. Well, less shorts.
Less shorts.
It's the
Less
nuance.
shorts.
Yeah.
My thing is, do you think I think some of the industry longs, I'm just guessing, have been in it for a while. Like I'm and haven't thrown the towel in on some stuff yet, because they surely aren't rolling that on forward selling, are they? Do you think? I mean, who are the industry people in there long at this point, and for what?
I know if they've been long for a while, they've been like all year and rolling into that negative yield roll where they're having to sell the front month down here and then rebuy the next month up here. It's brutal.
Yeah.
The textbook will say you're long because you have short commitment, have forward commitments. You're short somewhere. And I don't think that's the case. We all know why. We've talked through that. If there's orders out there, you're not going to see them until the last moment. So I think it's just folks trying to pick a bottom, folks guessing, and it's
so even though that bucket is a hedge bucket, you're saying that maybe it's not hedging.
Yeah,
that's what I just heard you say.
No, I told you about the lumber industry when I first started it, and they're like Texas hedge and
Matt, you're gonna love
all this stuff.
They call that hedulation.
Yeah.
Hedulation. That's right. I used to give education seminars. I used to go into lumber yards mainly was who I would talk with. Do this whole PowerPoint and fancy this and swaps and all this crap. And then you get to the end of it, and I said this earlier, Matt, you get to the end of it and they'd be like, so why would I hedge if I know the price is going to go higher? Yeah. I just hang my head. I'd hang my head and say, hey, here's my card. Call me.
Exactly.
Well, I think on an X post you said a couple weeks ago, if I heard, like, the traditionally industry is smart money, right? But kind of the funds have been the smart money on some of these moves.
They have, and I've been a big proponent of like watch this commitment traders and what the smart money's doing.
Yeah,
and they've taken the other side of the funds, the large speculators that have been right, and then eventually, that large hedge fund crowd will liquidate, and the commercial shorts will have peaked on their positioning, and then they kind of write it down. But the industry shorted all of May, all of June, all of July, like the whole time. So it's not like they picked the top. It's not like they appeared at the top and picked it. They grew and grew and grew and held their water, which is why commercial hedgers are commercial hedgers, is they can hold their water because they have an offset to it, which your speculator traditionally can't hang on that long. If you look at the chart, the long position is about what it was in May or June, like the long in a silo, just that long position.
The short position is half of what it was.
Exactly.
So the whole decrease in open interest is commercial shorts have reduced their position and fund longs have reduced their position. That's the offset, right?
Yeah, exactly.
Doesn't that kind of match like what should happen? When you get down to like 2-year lows or 1-year lows and you start looking at investment level type stuff, and then maybe you should get more longs in there. Isn't that sort of how free markets work, where, when the prices sell off, and like if you buy a brand new truck for $95,000 and then that same truck is offered for $65,000, 6 months later,
buy another one.
Yeah. Some guy might want to buy that truck.
There's no more longs. There's just less shorts. That's all there is. It's not that there's more longs. There's just less shorts.
Yeah. It's not bearish is kind of the phrase. And to your point, Matt, like low prices cure low prices. It's a thing we all live by. And the lower it gets, the more attractive it gets. And at some point it gets so cheap, it's below the cost of production. It's just like, all right, how long does it take for the supply response to revert this back to break evens? Because this idea that we can't trade below break even, you got to buy it. Like, well, we can trade really low below break evens because there's a whole pile of wood that it doesn't matter what the fuck what the break even is.
Yeah, well,
it's got
eventually it does, and you're right. I mean, we're in that segment now where there's log decks that need to be processed, and there's dress inventory that needs to go away, and there's those numbers need to filter to the beam counters to look and go, hey, and all of a sudden raise your hand and go, hey, if we do this, we're going to lose $200 million in the next 6 months, right? Yeah. And all of a sudden somebody says, well, what can we do to make that? What can we do to change that? I had a great conversation with two good conversations I want to bring. One was with one of the Eastern mills, and he's going like, Greg, what are you doing today? And I go, I'm seeking to understand the market so the market can understand me. He was like, what will you pay for this? I said, anyhow. but my point is there's it's over the next starting maybe 30 to 45 days, Matt. There's a significant portion of lumber that moves from producer to end user with no price discovery, right? It's all, contractual lumber that's done, and, the end user's a price taker. And, and I had the conversation was going, so at these numbers, will you have to have a floor price for next year? He didn't say yes for sure. He said, that's a conversation we're going to need to have, which, I mean, that's going to be an interesting dynamic on a lot of product groups. Matt, maybe you can answer this. So with 6, 8, 10, and 12-inch hem fir trading like $400 or less FOB the mill, is that a long-term sustainable number for U.S. West mills?
I don't think it's not the death of us. It's not. We're not paying a tax, so there's 35% right off the top. I don't think it's
higher log costs.
It's also not ideal, but we're not. That's. I don't think that's the kind of numbers. If it was a 300 or 350, yeah, now I could see where you're going to have some conversations. But at 400 to 450, then I think mills will continue to make that. And the biggest issue that you have coming into the fall and winter is just log diameter. And so we'll see. Like the math tells you, like right now, 2x4 and 2x6 is under a lot of pressure, right? I mean,
you're saying log diameter as far as the ability to harvest bigger logs.
Well, let's say 2x10 and 2x12 get really good. Like let's say there's activity in 2x10 and 2x12 and it goes up 50, 60, $100, something like that. Can you get more 2x10 and 2x12? Well, not if you don't have the right size logs. And so, we're kind of at the mercy of what we get. It's like,
is that seasonal at all? Like, it's just luck of the draw what they cut.
It can be seasonal. Typically, you're getting like smaller logs when it gets wet. They're not going to go as deep into the woods to get the logs, but there really is no actual pattern to it. It just sort of it's based on what you're able to buy. Like you got to remember, most of the mills in the West, they're buying timber, right? We don't have crown timber. We don't have federal timber. So we have to go out and make bids on timber. And sometimes we win and sometimes we lose. And we don't always get the same type of log that we'd love to get. I mean, if you got the perfect log, you'd get like a 2-foot diameter log, 40 to 42 foot long, and it would have very few knots in it. You'd be making all kinds of premium lumber out of that. And you could get all the 2x10 and 2x12 you ever wanted to get. But what happens if you get a bunch of 16-inch logs or 14-inch logs or 18-inch logs? I mean, it's something that we don't control 100%. Yeah. We can try, but it just doesn't work that way. And there's competition for logs, right?
What's the lead time right now on, like bidding for logs? Are they like, obviously there's like Western log prices should be under pressure given the price of the finished product today, right?
Well, I mean, the log market, it operates on its own. It's separate of the lumber market. So you can have lumber prices falling and log prices stabilizing or even going up. It really just depends on the available supply. And out here, you've only got, you've got a few big tree farm operators like Weyerhaeuser and Knife River and Campbell Group and stuff like that. But then you've also got these co-ops in Oregon and Washington that are a bunch of small, medium, and large private timber owners. Some guy owns a 5,000 acre ranch somewhere and he's got 2,000 acres of timberland on it, and he harvests it, but he's not doing it on his own. He's part of a co-op. And so when the log prices start to fall, then guess what? Oh yeah, we're going to shelve those plans for cutting this timber. We're going to wait until next year, right? They'll turn the spigot off. And
well, that's a big wild card would be like, if in part of the, housing emergency, the Bureau of Land Management all of a sudden was to offer a bunch of tracts of Western timber, right? I mean, that would
make Oregon the way it used to be, 30 plus years ago, where most mills in Oregon were probably 70-80% of what they were processing was coming off of federal land.
Yeah.
And now it's 10%.
So kind of a challenge here at all. What I'm hearing, we've all kind of said, I think this is what I heard, mills can't sustain. We're probably going to have announcements. What if we're all wrong for the next month or two, and there are no announcements, and mills just run for cash flow, and they're like, hey, we're already setting the benchmark in Canada for 2025, and when the curtailments are going to come will be 2026 when they reset the whole thing to start counting. Like, what if there are no curtailments?
At this point, all of the duty rates next summer will be up another 5 or 10%.
Because it's a 2-year trailing deal, right? But what if we're wrong and there are no curtailments for the next 2 or 3 months? No significant ones.
I think,
lumber starts with a 3.
Yeah, I think you're probably down. Like at the rate we're going right now, you could probably take another $50 to $100 off of the published numbers, depending on the item and where it is. Yellow pine prices will all be in the mid 2s, and that's going to be giving you a mill net of less than, like in the high 1s, which, based on what Charles has said, you'd be, pine mills would be losing $200 a thousand down there.
So what would you think of if we were trying to spin this into a positive? So, what would increase demand? What would make prices firm up and kind of stabilize, or at least go up a little bit here in the next 3-4 months?
There's no, we've been saying this for months now, or for at least a while, and we talked about it earlier, Stinson, is there's really nothing in the short and medium term that's going to substantively change demand. You've got seasonal working against you, and you've got, the structural situation of housing so expensive, income growth not good enough to support it. So, any Hail Mary type moves by the government, hey, they've been having an impact Q2, Q3 next year. But I mean, that's the challenge we have is Q4. Q4 is going to be really tough for everybody.
Yeah.
I think back to Matt, I think a positive is look at the basis opportunity again and the roll, right? Like we were talking about, that's allowing you to put some pretty good plays. And we still have okay liquidity out of the reloads on trucks, and heck, you're getting paid to have trucks in the ground for the most, up until a week ago, for the most part. I mean, and you still have you can still find numbers, right? You can still find numbers.
Sure.
Greg made a comment before you jumped on, and it's like he walked in this morning. He goes, "We're going to move 40 trucks today, and basically, I don't give a shit what price we move them at. We're going to find the market."
Wow.
And now, I think he did.
And you still have a little bit of work to do, by the way.
I do. I said, if he comes into my office one more time and tells me, I told the guy, if Greg comes in my office one more time, I'm going to jump out the window. And we're only up 2 stories, so that's not good enough.
Yeah.
So you got to give me an order.
Pain.
Yeah.
Just pain. Yeah. So just I'll be calling you tomorrow still, but I'll just be broken
But I mean,
that broken legs.
What
there's
about a rate cut? Is that going to help?
It,
I mean,
it's gonna help.
It's not going to hurt.
Macro. I think we need like an AI bubble burst that doesn't cost people a bunch of jobs, but like that kind of sucking that money out and folks kind of getting back to reality, and like, because it's hard to cut rates when stock market's at all-time highs. And some of this construction investment, data for data centers and all these things we all know about. So I think we need a little bit of the
if they just
AI
start using
bubble.
lumber on all the data centers, then we'd be all set, Matt. That's what we need.
Stinson, I was YOLOing in and out of stocks, and I finally gave up and sold them all last week. So all the ones that were ridiculous that I didn't know anything about, and everybody was saying that you should just keep buying them because they're going up forever. There's a lot of that going on, right? A lot of
it is. And there's a thesis out there. We're kind of getting outside of the lumber market a little bit, but there's a thesis out there that because you can't, this folks in their 20s and early 30s can't obtain home ownership, there are dollars that would normally be going towards down payment or something. And that kind of like their risk on is these weird crypto and meme stock type stuff. And there's real wealth being built. A lot of wealth being a lot of wealth destruction in sports gambling. That's kind of a sad story, but crypto and AI stocks and all this stuff, like it's been a real wealth effect for folks in their 20s. And if that, if the rug gets pulled on one of those, then it's easier to see rates come down, because Fed cutting not going to hurt, but it really doesn't affect a 30-year mortgage. We're seeing the yield spread, they call it, I think, a bear steepening, but it's steeper. So the nearby rates are less expensive. That's the Fed has more effect there, but the 10 and 30 year is not moving as much as the front end of the curves. I just don't know how much relief we're going to get if the Fed cuts 50 basis points, which is kind of, we had this massive job revision for 12 months running. It's like, is a 50 basis point cut on the table? It does not mean 30-year mortgage is dropping 50 points, not even close. And you see the same dynamic play out in any futures market. In lumber, the front month is where all the action is. The back month kind of like is somewhat stable. So
the 10-year today is down, kind of near the low of the year at 407. And I mean, if and today the overnight rate is still a little bit higher than it. It dips down the 2 year, the 3 year, the 5 year, they're like in the low sixes. And which is why Ashley and I were talking the other day is, most of the stuff that's originating right now is being done on 3 and 5 year arms.
Yeah,
right?
Because look, I was looking at mine resetting next year. I go, maybe I won't get nicked up too bad because the beneficiary is going to be the short term.
Yeah, I mean, I'm going to say right now, it's like I'm not going to be surprised if they cut 50 basis points. The long rate probably will tick up a little bit, but I mean, at 4% or 4.10 or 4.25, that's still cheap money for long term. I just don't see interest rates being a savior for housing. The savior for housing is lower housing prices and income growth.
So you get the lower prices by building smaller homes with less options.
Yeah.
And
my wife loves that show.
We've got to get
loves that.
All these municipal governments that are, charging $30,000 to $50,000 for a building permit to get out of the way and stop using new housing as a revenue stream like they do property taxes and sales taxes and, the lottery money and all the other stuff that they've got their hands into. So, I mean, Trump can't fix that.
Well,
the president can't tell a municipality, hey, you got to lower your permit costs.
Well, I hear he's going to try and tell Ashley and Greg in Chicago a few things. Maybe they'll march right into the permit office.
Yeah.
They'll send them into the permit office.
You know what?
Real change.
I think people going, no, you know what? We don't want you to come in here and take people who are here illegally and committing crimes. We don't want you here doing that. I'm saying right now, I'm going to raise my hand. Hey, come on in. And you know what? I mean, I don't want those people in my city. They don't make my city better. You know,
Yeah.
hey, we're going to come in and instead of having 20 or 30 shootings and 10 deaths every weekend, you know, we're going to try and do something to stop that. You know, like, no, we don't want you to help us. We want to keep killing these people week in and week out.
How do you really feel about this?
Geez, Greg, you got serious real quick.
Hey,
I mean, it's insanity. It's absolute insanity.
Real quick, I wanted to ask.
It's not about politics. It's about like human life. It's like, hey,
yeah,
like, come on.
Stinson
did you see the video? Did you see the video of the guy stabbing the girl in Charlotte?
God, we're getting into it now.
No, but
yes.
I'm like, come on,
terrible.
Man. It's like that's like it's like when are we going to stop accepting that as a society? That's my thing. Like, this is a societal question. What are we willing to accept? Here's the thing: homelessness. Guess what? San Francisco used to have their homelessness was absolutely out of control. It went way too far. And then what happened was APAC came in town. They cleared everybody out for about 2 weeks. And everybody went, wow, you mean we can really do that? And now they're going, hey, no, we don't want to have this in our city. Portland's not there yet, Matt. You guys need to get enlightened.
Portland's actually cleaned up its act. I mean, like, I can just spend a minute talking about it, but Portland, they've tried. You know, they're working on this problem of homelessness. And you know, I did my high school senior thesis on homelessness in Portland, Oregon in 1986.
Wow.
So this is not a new problem, right? And I think in 1986 we had like 11,000 or 12,000 homeless people in Portland. The differences between 1986 and 2025 is that in 1986, most of the homeless people were kind of centered around about a 10-block radius of Portland. They all just stayed in one area. There was a bunch of soup kitchens down there and Christian missionaries, and they were being supported in a way that, you know, kind of kept them all close. Now they're just sort of spread out all over the city, and you've got them living in broken down, you know, RVs on the side of a neighborhood street. You know, they're just kind of everywhere. And what Portland's doing is they're basically playing Frogger. So they go out and they'll clean up an area, and then they move on to another area. And then, you know, 3 weeks later, that area that they cleaned up previously just gets re-inhabited again. But at least they're trying. And so, you know, when Brian Westbury came to town last week and I went to go see him in downtown Portland, downtown actually looks pretty good. I mean, I drive through downtown every day, and it is definitely cleaner and safer than it was 4 years ago. I just don't know if the general public views Portland that way because, you know, we've taken 5 years of bad press. So, you know, but they're trying, Greg.
That's good to hear because, like you say, it's, you know, this is a choice. Like, if you know, like, if you want that in your city, you can have it. If you don't want it, you can not have it. It's a choice.
Well, Chicago's not getting a choice, right?
Chicago's made a choice. It's just at odds with the
Here, let me tie this into lumber. I'm going to tie this into lumber. You're going to appreciate this. So,
I love
pendulum swings too far. Okay. So we had a justice system that a lot of folks thought was really unfair, treating folks unfairly, prisons treating folks unfairly. That caused a massive shift to this super liberal, lenient, kind of
cashless bail. Yep.
Benefit of the doubt to the potential offender, right? And now this thing is swinging
back
in another direction. How far? So, hey, $700 lumber, way too far. $500, hopefully too far.
Yeah.
And
maybe,
we'll go from there.
Maybe 400.
Yeah, we'll see. You know, $500 futures, I should say.
Matt was asking about how we can tie something lumber-wise positive into this. And Stinson, you opened it up by saying this. Where you're sitting, where Revel is sitting right now, when you look at a map and of the positive real, how can I put this? The real estate areas that are moving well and trends. I mean, you are sitting like in the sweet spot. You go Madison, Wisconsin, over to Milwaukee, you know, down to Central Illinois, Des Moines, over to shit all the way up
Columbus.
Columbus.
It's Midwest, mid central. Ash. It's all the areas that didn't go up a lot during
no,
COVID.
I get, and I mean,
right?
I've seen this going to houses and open houses in our area. It's a feeding frenzy still. It's crazy, and
It is
there's
crazy.
So what is that about this area? And Greg, I think what are you seeing in the Revel area that is so positive that it's like is part of it because we, like Greg said, we didn't blow up and things are still affordable.
Yes.
Yeah. It yes, there wasn't like some like hot item, like hot employment, like Texas. There's so many headquarters moving there, and Charlotte, same thing. And then, just like kind of destination. I mean, I was a part of it. I moved from Kansas City to Colorado in 2020. Kind of like, here's a window to reset, where we're going to raise our family. And so I don't think this upper Midwest region had a lot of like huge like things that sucked in a lot of population. So now what it's left with is a somewhat affordable scenario. If you do want to have a house and live in a neighborhood and have a yard, this is where prices didn't get out of control. It is wild to me, Ashley, that Chicago, my whole time in the industry, 2014 forward, Chicago has been like this, like, I don't know, this really negative connotation around growth and the ability to make any money there and housing and real estate. And it's just been like never recovered. And now it's like the greenest of green dots.
Yes.
It's Chicagoland. Our biggest customers, a national builder there.
It's 20 years of underbuilding.
I'm kind of curious
with COVID not experiencing the same price increases, right?
What's an entry level home
super
in
low,
the Midwest
super low beta on price?
In your Stinson, in your region, so you're shipping product, let's say, to 5 or 7 different states. In those states, what's an entry level home going to cost a young couple?
$399, Crown Point, Indiana.
Yeah, I mean that's $100,000 cheaper than Portland, and you're probably going to have to do $50,000 to $100,000 worth of repair work to it once you move in, right? For your $500,000 starter home.
That's amazing.
Oh, sure. I was talking about a new home.
That's a brand new home, right?
Yeah. Yeah. The stuff we're shipping to these neighborhoods, these lots, these are $399,000 homes.
Yeah.
So an existing home, which these home builders are having to compete against for the first time in a while. I don't know. Wasn't there a pretty popular chart that new homes are cheaper than existing homes? This is a nationwide number. Hyper local, Matt. I don't know. Hyper local to my market. I don't know what used existing home is going for, but I know the new homes are. It's weird, like being a Colorado guy and seeing that you can get 2,000 square feet for $400,000.
You couldn't get that in Denver?
No.
I was being facetious.
Yeah, it's 800,000 in Denver, and that's $1 million house in Austin, right?
Yeah.
And I will say that same, that's in Columbia, South Carolina. That's like 350 to 375, right? Just outside the city.
Yeah,
my theory is that all the new influx of business to your area, Stinson, is because the Big Ten's so powerful now.
I mean, I've adopted Indiana football.
IU. There you go. Yeah,
I'm a big fan of their coach. He's cocky. He's kind of what that place needs to be relevant. And they got a prospect, a quarterback, I think, and they outperformed last year, made playoffs. But anyway, Big Ten football is kind of overtaking the SEC, and folks are proud about it. I'll tell you that when I'm there, they let you know.
Hey, I got to roll off. Stinson, great to have you on, man, and congrats on the article and more to come. And let us know if anything we can do. I think your phone may ring off the hook with new vendors after being on the pod. That's happened to folks before. So
sign me up.
Be aware, and anything we can ever do, let us know, man. Okay.
And I'll put down in the show notes all your X information, your LinkedIn information, and Revel's contact information so they can get a hold of you.
Yeah, I'd appreciate that. So yeah, thanks for having me on, guys. Appreciate it.
Appreciate
I
it.
mean,
Thanks, Stinson.
we wrap it up. Greg leaves, and like that's the show.
Well,
That's-
no,
well,
I'm not
Greg-
done talking yet.
Greg,
Dang it, I got
Greg,
more to say.
Greg, you go ahead, Matt.
I am going to say this: if anybody wants to XPit with me, and they can take KD Western Whitewood species as a product, and you know that they're willing to substitute for spruce or hem fir, then give me a shout, because I can hook you up with that, and I can solve your XPit needs.
That's good. And Matt, we put a list out of trucks we were EFPing in the Northeast and Midwest the other day, and Stinson, you touched on something real quick on the new contract. I don't think people really sometimes give it enough that you can ship pretty much anything into there now, as long as it's not Canadian hem fir or Canadian Doug fir, right? Does that make sense?
I gotta look at it again. I think you can ship to Doug fir, which it would be a little silly to do so.
Well, there hasn't been any deliveries actually on this new contract yet, from what I know. But Matt, that's all. You can. You're going to EFP some cars, right? That's what you're looking at doing.
I can if the right guy can use it. So it just depends on local building codes and whatever your. Yeah, there's areas of the United States where this stuff works just fine.
So let me ask you some questions about building codes. I've been having discussions with folks in the industry around the grading agencies, and these stamps: white fir, whitewood, hem fir, ESLP, Doug fir, spruce, pine. And kind of one of the problems with species switching or adoption is the engineers or the architects, they know what gets the stamp, or they put their stamp on it, and it's like good for a lifetime. And like, hey, I've never had any problem speccing this, and because it's kind of overkill, but they don't care. So you want to do a switch. So then it's like, all right, we need to prove that white fir and hem fir have the same compression rating as spruce. Maybe I know it won't as Doug fir. Is that a discussion that comes up at the mill level at all? Like looking at these spec sheets, retesting? This again, a side conversation, and I didn't have any answers. Is that something that ever is talked about?
Nope. Those compression ratings, and I mean, the only one that I know of that's been updated in the last 30 years is the yellow pine one, because the log quality has gone down a little bit, and so they had to lower some of the strength ratings on yellow pine a few years ago. But I don't think they've done any real analysis on hemlock versus spruce, although you can get plenty of charts and graphs that show all the different ratings. WWPA puts stuff out, and there's a Canadian grading agency that also has a chart that you can, I forget which one it is, but yeah, you can get that information pretty easily. But in a market like Oklahoma or Texas, where there's no snow load, you can kind of, for the most part, you can use just about anything. And
I used to have a spreadsheet like that for pine, spruce, hem fir, Doug fir, MSR, select structural, all of them. It had like 100 different items with all the different characteristics, and they lined up by strongest to weakest and which ones could cross. And I can't find where the thing is.
Man, you need to get that.
It was the most helpful thing I had, because I would be shopping a Southern Pine item for somebody. I'm like, well, but I can get you this, and it meets all your requirements. And here's the spreadsheet. And so I think it got taken on one of my computers when I left a company. I'm not sure. I think
the old savvy guys that used to own their own lumber yards had all that information in their head.
That's who I got. Well, I got it from an older guy that put it together. That's not around anymore. He was an MSR trader, and he's the one that gave it to me, and I turned it into a spreadsheet. He had it written down on like 30 pieces of paper.
Yeah, that's funny.
And it was priceless, right? Because you can still find that information somewhere, but it's good to have in front of you.
Well, you know, consolidation has changed all that too. So we've lost some of the older guys in our business. Either they passed away or they sold out. And so you lose some of that brain power that goes along with it, that willingness to be different.
I bet
And
you
now
ChatGPT could scrape that for me.
well, you've got corporate buyers that are buying from multiple locations, and they just buy what the computer says that they're buying, right? And if the SKU says spruce number 2, guess what? They're going to buy spruce number 2. They're not going to take hemlock because that's not what they've been taught to buy. And I don't blame them.
Find that spreadsheet for me. I'm gonna recreate that one.
Yeah, good luck. Let me know. That might be a multi-day project for you.
That'd be a multi.
You better sell your 40 trucks first.
There's a new guy that works here. He's got a new project.
Yeah, I was gonna say that you guys got some juniors on your staff. Sounds like a junior's job. What do you think? I'll keep rambling. You guys are gonna have to cut me off. What is the market least prepared for? Is a question I consistently ask, based off buying behavior from developers and GCs on down. I think a price spike has sustained. I mean, we've survived 2 price spikes this year, so.
That's a great question. That's a great question.
The industry is least prepared for, I would say, like a very significant, quickly implemented West Fraser shutdown curtailment.
I'd agree with that. I would agree with that because of the way people are trying to, like, when we had the conversation early, we noticed in the last few days, people are coming to us and they're trying to push their risk off to us and in these markets, people start taking crazy orders because without any risk management, there's no real way to lock in a forward order right now without pushing the risk to somebody else. So back to your point, markets always do what hurt the most amount of people the most. Nobody prepared for this big a sell-off. And we said there's going to be a U or a L bottom. Nobody would be ready for a V bottom.
Mm-hmm.
Yeah. But what if we sold off another 100? Wouldn't that hurt a lot of people too? I mean, that's I don't think anyone expects $420 lumber, right?
It's interesting, Matt, because I'm further up in the supply chain and my customers would love that. That would be great.
Sure.
They would have no problem. Like like this.
Yeah, your customers would. They would love that.
This perspective of like, in my viewpoint, they're most prepared for just low and slow. And hey, further down, the better. And the end user, let's call it that, the end user is least prepared for a V. I'll say that.
For higher prices. Yeah.
For a significant rapid, and like they won't believe it for a while.
Well, right now the industry is hollowing out their inventories, right? So Ashley and Greg, you're selling more inventory than you're buying. My inventory has been dropping. You know, I'm not. You know, I'm buying sheerly at the most. I just buy replacement. You know, if I sell, 10 trucks, maybe I buy 2 cars. Maybe I only buy 1. Maybe I buy none. And so, there's no real reward for having inventory right now. Whether you're a distributor or a wholesaler or an end user, those guys are also getting pounded on inventory. You know, we don't talk about that, but it's true. They've been told by their VPs and guys in charge, hey, keep it low. Yeah. So the industry's trying to operate with really thin inventories, and at some point, either the mills, puke that into the market at whatever price it goes for, and do the transfer of material, or they don't. And so, if we get a bunch of curtailments, then all of a sudden you've got an industry that's pretty light on inventory going into a decent time of year. The fall is not dead, right? I mean, there's going to be plenty of homes started here in the next 2 months, 3 months before the snow comes. And then the other half of the country doesn't really get snow. So it's not, it's more of a rain issue. I don't know. I think you're kind of right. I think you're onto something there, Stinson.
Yeah. Yeah, no, that's a great question because we all have that herd mentality in this industry, right? And you have to plan for what ifs.
Yeah. And the hardest part, Ash, is there's really not a good tool to hedge upside because the futures are at such a like the structure of LB1 versus LB2 is like, you can't do that. So you just gotta buy it and hold it, and hedge it and roll it, I guess. But there's no simple answer. You can't click a button and hedge yourself at this point. You really got to do some work.
Right. No, that's a good point. That's a good point. And I mean, we're looking at a perspective of selling lumber. And Matt, you're in a unique situation because I mean, one of the things you think about too is kind of sucks if you're a mill right now because they're going through the shit, right? Like, I probably wouldn't be real excited walking in being a lumber trader on a mill floor right now. There's probably a lot of closed door meetings going on and people looking at you sideways, right? That, that's a tough one. I mean, and we're going to see a lot of change. I guess my question too is, we've seen a couple small distributors go out of business in the last month or so. I mean, are we going to see any more of that? I mean, what do we have to? I mean, people that aren't hedged that had a whole position on the ground, or what's? I mean, I don't want to see it, but I mean,
I hope not.
I mean, when business gets tough, and look, I know this isn't 2008, 9, 10 that we rode through that, Matt, and we saw a new person go out of business every week.
Yeah,
you guys have been in this game twice as long as more than twice, whatever, but longer than I have. Okay, you're on the back end. How does this market and the potential compare to other markets? 2008, of course, but then there's 2018. I kind of lived that. There's a recovery, the slog coming out of the Great Recession. There's the .com bubble. Like, where does this rank as far as like really tough market to make money?
Well, we just lost. I would say, Matt, I'll jump in first. And like Matt and I were talking together daily during back in that time period. And, speaking from experience of, a company up against it where I was at one point, but what I know, we went from 2 million housing starts
to 500
to 500,000. And I mean, Matt, I mean, if I remember right, there were some days where you had no liquidity.
Yeah, there's you would call, you're talking about the worst period of time ever in our careers. And this is nothing like that. This is closer to 2018.
Yeah.
But this is actually not, it's not, if you're a mill, it's hard to make money in this environment. But if you're a wholesaler and you're willing to hedge and you're willing to take some forward orders and take some risk, then this year hasn't been god awful for you because you can sell the back months with these big premiums and you've got locked in orders ahead. And then you could also, for the first half of the year, you could forward sell some big projects at, some decent prices. And so I think the last 4 months here is going to be tougher to do that, right? Like you said, Ash, there's people wanting to push the risk onto you now. The only obvious thing that I can think of that just is a stone cold sell would be like January at plus 90. I mean that, and even if it's a low number, even if it's 605 or 610 or something like that, it's still the best number on the board that you could sell at on any item, right? Any liquid item.
You're selling it because it's plus 90, not because it's 605.
Exactly. And then you can use that if you're wrong. If the market does spike 100, you can go out and buy 10 or 15 cars of cheap material real quick and just park that somewhere and then work that trade out between now and sometime February. There's ways to protect yourself. So I don't have a problem with selling January or even November, but you also have to have some skin in the game and be willing to pounce if things change real quick. And so, but in the short term, look, I think it's just going to be more people waiting for announcements and just slugging their inventory out every day, until something changes.
I think folks are pretty numb to announcements too. Like Enter 4, it's like, okay, so what? And when you start parsing the numbers, like, all right, they're starting to add up. They're starting to add up. I've been hearing that for a while, that these curtailments are adding up. Yeah. And here we are. And I just think what got us out of the 18 into 19, demand was recovering. And then we ultimately ran into COVID, but it was a big West Fraser announcement and it was massive. And that was the bottom, and that's what turned the market. And I just like Greg's point that he's been making is demand is not here to rescue our market. It's definitely going to have to be something on the supply side.
Well, there definitely is going to be less euro coming in, right?
Yeah,
And-
we're already seeing that. And the euro that is coming in, most of it's pine coming over now, right?
And I think we're going to see less production overall in the next 4 months than we did, than we would have normally expected if things were just ticking along. So in one way or another, you're going to see curtailments. This is not sustainable. This
and
is
like both you
not
said, like
sustainable.
we all know that with the size of producers now, demand takes a long time. It's slow and plodding. It's almost like running from the steamroller that's moving at 2 miles an hour. You see it coming. Whereas demand, you could, if like Stinson said, you have a big mill, make some curtailments. I mean, you could lose 1 billion board feet like that, right? And that's like shock and awe right there.
Yeah. We shall see. It's going to be interesting next 4 months. I think wild and woolly, lots of volatility in front of us, and yeah, that's what I think.
As buyers, though, it's Stinson as people that are buying and doing home builders. I always say the more optionality you can have on species, the better you are, right? Like if you want a firm number for me and you give me 3 options of species that I can ship you, you get a better number. If you give me one item, your number's going to be a lot higher, right?
That's right.
If you give me anything in optionality, I think going forward, if people want to really benefit from this market and uncertainty in certain species, give people that you give firm orders to optionality on species, and you get, I think over the long term, that's a winner chicken dinner for people, right?
Yeah, I think coming out of COVID, I know Ash, we both like consulted or just took phone calls from people like, what do we do and how do we do it? And that's always what we would tell them is like, you got to open up your spec. Like you got to figure out a way to let someone ship different kind of species in there. And that opens up different markets. And all of a sudden you see pine up into Madison, Wisconsin, and white fir into Charlotte, and all sorts of weird stuff. And that's how markets should behave. The ones most reluctant to it are national lumber yards and national builders. Obviously, those two are connected. But you did see some creative folks on the multifamily side start to make that switch. So
yeah, you did.
Yeah,
you did.
Well, hey guys, I think I got to get back to it.
All right, boys. Stinson, thank you. All right, guys. Well, I'll put the pot out tomorrow, and thank you for taking the time.
Thanks, all. Thanks for having me. See you, Matt.
Take it easy. See ya.